There's a sector of the market that has been weak for many months, but is now starting to turn. I'll show you what that is and the opportunity, as well as provide my regular analysis of the overall market. It's all coming up. All right, welcome to this week's Market Minutes. Let's take a look at the S&P 500 to begin, as there could be a breakdown here that could lead to a more substantial correction or pullback. We're going to draw a line across the upward trend line, which of course was broken a few months ago, and we're now building this falling top. And if that falling top leads to more weakness and we actually get through that floor there, we could see a more substantial correction. Now it's not broken down yet, it's simply made the falling top, but we could of course still move back up and get to those highs. So just something to keep an eye on. Looking at the short-term chart of the S&P, the 1 month 60-minute chart I like to look at, you can see that this week we broke that little upward trend line. It was actually the end of last week, and now building a little bit of a downward slide. So what you want to watch for is whether this downward trend line can be broken from a rising bottom. All right, let's take a look at the NASDAQ QQQ. Similar situation. That long-term upward trend has been broken, and then this past week we broke down a little bit here in the short term. That could be a breakdown from a falling top, and if we break down through this support, we could be headed lower. Looking at the short-term chart of the NASDAQ 100, you can see the break of strength, and then we've been in that downward trend for a number of days. All right, let's jump over to the small cap sector, IWM, and we're testing support here. We've got falling tops on the chart, and if we break down through this floor, more weakness ahead is likely. Haven't done any of that yet. I've said a number of times all of these things are things that have to happen, but they could happen, and so we have to keep an eye out for that. All right, let's take a look now at the Canadian market. XIU on Toronto is the TSX 60, and you can see a much better looking market here. Of course, that's because of commodity prices. We're breaking out to new highs the last few weeks, and with strength in oil and with strength in gold, that favors the Canadian market. So if you're looking for a overall market to be focused on, it is the Canadian. Looking at the TSX Venture, which is those small cap stocks in Canada, micro cap if you will, we've been drifting in this sort of downward sloping channel, not much excitement. The last 3 weeks a little bit of a lift, and so perhaps there will be more strength ahead as it is starting to firm up, but it is not there yet. All right, let's take a look at the gold market, GLD, and GLD gold broke the downward trend line a few months ago and is moving up since then, hit resistance there. It pulled back and is now starting to firm up, and this looks a little more clear on the 1 month chart. If I go into this one, you can see that the downward move is getting shallower and shallower, and you're starting to build some upward momentum again. So I think we want to keep an eye on the gold stocks in the next couple of weeks because there could be some strength there. Watch for a break up through on the GLD through 182 with some volume, with some enthusiasm. 182, 183. If that happens, gold stocks may be a place to play again. All right, oil. This is, of course, is the 3-year chart of oil, and you can see that we've gone into quite a steep upward trend. We ran away from the trend line, we've pulled back to it, and now that we're at that upward trend line, we should bounce and resume the upward trend. And so to help us understand whether that is happening, we're going to watch this shorter term chart, and you can see that we still need to break that pullback. So if next week or in the next couple of weeks we can break that pullback on the short term 1 month chart and then hold on that longer term 3-year chart, we would have a good opportunity. All right, now I'm going to show you something that we haven't done in the past. What you can do on Stockscores is create a watch list of any number of stocks or ETFs. And so what I've done is created a watch list of sector ETFs. And I can then go through those charts on a regular basis to check out those charts of those individual sectors. And so if I go into the charts tab and go down to the slideshow chart viewer, and I'm going to select my watch list. I've got one there called sector ETFs. I've got a lot of watch lists built, and it starts off with the financials. All right, so the financial sector, now this is the US sector financials, is stuck in a sideways range, doesn't look particularly strong, doesn't look all that weak either. It's just stuck in that trading range. So what I like to do is go through these on a weekly basis to see where there is strength. So this is the gold miners. They've risen up to resistance and they're getting a little bit stuck here. But if they go sideways for a week or two and then break out, then they should move up to those all-time highs. All right, let's go through these a little quicker. Energy is a strong sector, but going parabolic, which means they're risky because the trend or the prices have run away from the trend line. And typically you see a pullback to the trend. No sign of weakness yet, so it's a good place to hold, but I'm not too enthusiastic about chasing these stocks higher here. Here you can see another gold miner sector. This is the junior gold miners, and it has recently broken the downward trend line, not with a lot of enthusiasm yet. You can see the volume isn't really there either, but if we can get a break, strong break to the upside, then the junior gold miners may be a place to play. The banking stocks look relatively weak. I would avoid bank stocks. Construction companies looking weak, of course, in a realm of higher interest rates, inflation, that sort of thing. Home construction is going to suffer. Metals and mining. So this is a broader range of metals and mining beyond just precious metals. And you can see that it's been very strong. And again, that comes back to the surge in commodity prices, a lot of that due to what's going on in the Ukraine and Russia. And of course, with that supply from Russia being impeded by sanctions, these commodity prices are much higher. And so nickel and copper and all of these things, their prices are surging, and that's why that sector is doing well. Would I want to buy that sector now? It's a little bit late. You know, the sector broke out about 6 weeks ago. I think it's good if you have an individual stock in the sector that is showing a fresh breakout, but generally for the sector, it's a little late. Here's the home builders sector, broke the upward trend line right there, and it's been moving lower ever since. I would say that is one to avoid. We're going to get to one that is worth considering here in just a moment. Retail, so this is your retailers in the shopping malls, that sort of thing. Weakness there. Utilities, rising interest rates help utilities. You see the breakout 3 weeks ago, and so that utilities sector is a good place to be. Consumer staples at all-time highs and in an upward trend. I think they're good holds. I don't know that they're good buys here because this sector has been moving up for a year and a half. Energy, talked about that already. Strong sector, but not really one I'm willing to chase to the upside. Materials in a pattern that could lead to something. So this is a rectangle consolidation, sideways pattern. If we can break out to the upside, then we would have a good potential move higher from that. So watch this sector, the material sector, XLB. If it can break out, it could be good. Telecom looks weak. It broke down through support and now building a falling top. I think telecom more likely to go lower than higher. Industrials stuck in a sideways range, not a lot of excitement there. Real estate, choppy, decent upward momentum longer term, but choppy in the last 6 months, so probably best to avoid still. Another real estate sector. Biotech, this is the one that I wanted to focus on because the biotech group has really been dismal for 6 or 8 months. It is, however, rising up to its downward trend line, and that could lead to a break to the upside and reverse this long-term downward trend line. Now, to help us see that, we're going to jump to the 1 month chart, and there you can see the optimism that's building. So if biotech can break out through the 136 level on the IBB, that would coincide with a break of the longer-term downward trend line on the 3-year weekly chart. And so I think that this is a sector that could create opportunity. I want to emphasize, this has not happened yet. It's just that something where it could happen tomorrow, 3 days from now, 3 weeks from now. We never know, but it is something to keep a close eye on because it does appear that there is growing interest in the biotech stocks again. And the nice thing about biotech is they really create a lot of the best trading opportunities for retail traders because they are so volatile, and you can make a lot of money on them in a short amount of time. All right, healthcare breaking to new highs from a volatile pattern. Good hold, but I wouldn't be a buyer. Technology looks weak to me. I would avoid the technology sector. Consumer discretionary looks also weak to me. Broke the upward trend line now, breaking down from a little falling top. Semiconductors, same story. Broke the upward trend line, now breaking down from a falling top. Best to avoid the semiconductors. And the oil service looks pretty strong. If you see individual stocks in that group that are showing strength, then I would say they are worth considering. All right, well, that has been the Stockscores Market Minutes for, what is the date? April 11th. Hope you've enjoyed it. Trade well.